India's economy is at a pivotal moment, offering a wealth of growth opportunities across a variety of sectors and market segments. With its rapidly evolving economy, India truly exemplifies one India, multiple growth opportunities. In line with this, Groww Mutual Fund seeks to empower investors with the Groww Multicap Fund, which aims to provide a diversified approach to investing by offering exposure to large, mid, as well as small cap companies, giving investors the chance to capture growth across all market caps while participating in India's economic transformation. In this session, we're joined by Mr. Rajendra Bhatia. He's the Managing Director and Chief Wealth Strategist at Arthashastra Investments Private Limited. With over 25 years of experience, Mr. Bhatia specializes in creating goal-oriented, tax-efficient investment strategies for high net worth and non-resident Indian families. In this discussion, he will talk about India's unique market dynamics, the challenges of predicting market cap performance, and how investors can position themselves to capture growth as India moves towards a $10 trillion economy. Please note this video is for educational purposes only and not a recommendation. Before considering any investment, be sure to read the Scheme Information Document or SID carefully and consult your financial advisor to assess its suitability for your financial goals. So let's begin. Mr. Bhatia, welcome to the show. Thank you for taking time out and joining us today.
Thank you, Karunya.
Well, we're here to talk about India's growth potential. So, first up, I'd like to ask you what sets the Indian market apart from other global markets, especially in terms of how large cap companies are performing?
Great, great question to begin with, Karunya. Indian markets. There are two distinct differences in Indian markets. First thing is that India's Indian market is very well diversified as compared to any global market. Now, when you say the GDP, Indian GDP is well diversified. We have services, we have manufacturing, we have exports. So our GDP is well diversified. If you compare that with global, I think other than US, no other Europe is not a diversified. It's majorly based on manufacturing. You see, China is majorly on manufacturing and exports. Most of the countries, Japan is aging now. So even Russia, if you see Russia, UAE, they are all dependent on oil or defense little bit. So if you see the difference, this difference is very stark that we are well diversified. Second big difference I would say is the debt to GDP. Now, if you compare India, just two comparisons, India and US are the two markets where there is a growth or future growth also expected. And so that gives us good financial strength, or the balance sheet of India looks very strong as compared to so many other countries. Now, if you see anywhere in globe, there is no growth and the balance sheets are weak. If you see India, we are growing and the balance sheet is strong. So, any company, any individual, anybody you compare, debt is one good parameter to compare whether how your future is going to be. So, India's future looks bright since we have been very decently managing the debt. So, these are the two major differences I think for India. Now, comparing to large caps. Now, again, if the same analogy fits in for large caps also. So Indian large caps are in from a very varied space. So if you just compare with US large caps are majorly tech based or innovation based, whereas India has large caps in construction also. We have in infrastructure also. We have exports also. We have tech based large caps also. So India's large caps are very well diversified set of companies, and is as compared to global. We are still mid caps or small caps for a global this thing. We are there is a huge potential, which is runway, which is still there for us to grow. So India's large caps, and we have had some decent history of last 25-30 years, where companies have been. Good companies have become the large caps, and there is good runway for the future too. So this is the major difference, according to me.
It takes me to the age-old question about predictability and projections in the market. Why is it so challenging to sort of predict which market cap will outperform in the future? How more importantly, can investors approach all of this uncertainty? Because that, of course, not everybody is equipped to predict or monitor that.
Wonderful question. Uh, Basically, if you see, investing is a long-term journey. Wealth, it's a long-term investment journey, and in this long term, it is very very difficult for a seasoned investor also or a seasoned professional who is in the investment field to choose whether large cap is good, mid cap is good, or a small cap is good. The reasons being that there are few companies. Every cap has its own virtues. So large caps are persistent, but they are slow in growing. But they are persistently growing. So long term, they will also create wealth. Mid caps are the proven leaders of past, but they also have the potential to grow, and they are like the future large caps. Few among them. Small caps, on the other hand, are the fastest growing companies, but they also are susceptible or vulnerable to more volatility or market dynamics. So for a seasoned investor also it becomes very difficult to choose between a large cap, mid cap, or a small cap. I think a decent approach for an investor to have a mix of all three is the best approach, especially since investment is a long term journey. It's not आज मैंने ले लिया उसका डबल हो गया. That's not the journey. Is all about long term wealth creation.
You started by talking about how promising and how strongly positioned the Indian economy is. Now, with India's journey towards becoming a $10 trillion economy, how should investors sort of position themselves to capture this growth from various companies of all sizes?
So again, the approach is same. It should be diversified because large caps. It should be like a buffet. You should have everything kind of a thing. Very recently I heard somebody saying that 10 trillion is not a big target. It's practically, if you see, Indian GDP has doubled every 8 years. Okay. So 10 trillion is only 13, 14 years away now from years. But what wealth is remaining or is there on the table is something amazing. Just I'll give you an example. India were at half a trillion in 2000 and Nifty was at 1000 at that time, approx. Today, India has grown to 4 trillion. Okay. And the Nifty is at 24,000 approx now.
Yeah.
See the amount of wealth that has been created 24 times. Obviously, mutual funds may have done better. Some mutual funds may have done better than that also. If you just extrapolate this to next 13, 14, 15 years, and if you see there is huge amount of wealth which has been generated. The basic thesis on which stock markets grow is the growth of the EPS. Now, in last 20 years, the EPS has grown, and so has the market. Next 15 years, I think so much more of EPS is available on the table for the investors, and a good diversified approach will definitely help investors grow their wealth.
So this multi-cap strategy, that you're kind of leaning towards, who stands to benefit from it the most, and why is it a good fit for those looking to participate in India's economic transformation or India's growth story?
So, I am in this business since 25 years now. So, one of the bane of, not only Indian but globally, education system is that we are taught how to earn money. So, you become a doctor, you become a musician, you become XYZ, and you get your profession, chartered accountant and all, and then you make XYZ money. But there is no education in the world which teaches you how to actually manage the money. And that's a different skill altogether. Now, one of the best approach for a person who is not aware is to take the best of our entire bucket, entire market, and just remain invested for long term. Second attribute of a successful investor is discipline. Okay, now the simple discipline is just have that faith, keep it for long term, align it with their goals, and this is the approach which have long term approach, have diversified approach. It's a very simple, but simple things are very difficult to do.
Yeah.
So this is why I have a bent towards multi-cap and flexi-cap kind of a strategy.
Okay, great. Just before we wrap, any final words of advice for investors, especially the ones who are less experienced or are new to the market? A word of advice or a word of caution, perhaps, for them? Anything, your closing comments.
There is a very famous quote by Warren Buffett. In 1997, Berkshire Hathaway AGM, he had said, I'm talking about 1997. He had said that, when we were born, means he and Charlie Munger, okay, there were odds of 30:1 against being born in USA. Okay, just winning that lottery was enormous plus for us. Okay, we and Charlie would have been worth nothing if he had been born in Afghanistan. Now, this is he named it as an ovarian lottery. Now, if we can just investors can understand, Indian investors can understand that all Indian investors have won this lottery. We are all forget about being means for Warren Buffett or Charlie Munger to from US to India or Afghanistan is big. Indians, if they had been born somewhere maybe 1,000 kilometers in a different place, would have been a big negative. Indians have born in India. It's a big lottery we have won. How can we leverage that? By remaining just disciplined, simple, and long-term approach. That's all that the investors need to do.
Well, hopefully it will, nudge them in the right direction after watching this conversation. Thank you, Mr. Bhatia, once again for joining us, sharing with us your thoughts on the India growth story and why investors, rather how investors can leverage it to their benefit. Thank you.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.